to Friday, October 9th. How's everybody doing today? I appreciate everybody being here. We're going to have quite a bit of fun today. Short term temporary top. Very consistent. Divergence from one to ones has a tendency to make you not want to get in at an area anymore. Um, The other thing that will make you not want to get into an area, which we've talked about a bunch this week, hopefully you guys have seen this enough to feel really good about it. White paint bars below the 8.3 triggers. Traditionally, especially if you're coming from some type of an area up here, I wouldn't be surprised if they make it to 62, but it's not going to be the easiest. And I really think 62 is the first spot where we've got, short-term potential. And if that one breaks, then the last major fib on our charts. I mean, literally, when I say the last major fib at the moment is 2080 or 280. So we'll see. I anticipate we might get 62. They may decide to put in a bigger retracement after 62 gets hit, or vice versa. If we get a second divergence to the downside, then we'll probably get down here. Just giving you some areas to think about anyway, short term. Um, Tell me, guys, what is it that I could possibly do today, since today's going to be my last day with you guys in here? Not that I'll ever go away, but Mark will be running the room next week. So, are there things that you guys would like for me specifically to go through that, perhaps you need a little more clarification or some type of explanation? If you do, then please let me know. I'll be more than happy to go over anything on the planet that you guys want. One of the things that I want to start with is the importance of a trading plan. And you guys have this. I gave you a copy of it. This is my personal plan. It's not yours. But I'm going to give you a copy of it. Um, let's see what else we've got. Um, let's see. Mark sheet. I'm trying to find. I think this was Mark's Keep It Simple trading plan. And this is the one, actually, this one's from a couple years ago, but I guess it's the same thing. Nothing has really changed. Anyway, short version, this is an old version of what we do, but this is really what you guys need as far as getting started if you're a new user. And Samuel, an 8.3 chart. It's not an 8.3 chart. I'll show it to you. It's actually a range-based chart, and then the trigger lines on the range-based chart are the small triggers, which again, look, let me show you just input-wise. When we look at the trigger lines, our normal traditional small trigger line is a 20 period linear regression moving average with a 5 period exponential moving average. And that's these two triggers, the red ones and the green ones. Those are our small triggers. And then the second trigger that we have on our range chart is the same trigger, but it's an 8.3 instead of a 25, which just makes it faster. So that's the trigger line that you see, this white one that's going down. So essentially what I do, how do you turn the fib lines on the market flow? Go in and load the template. that's called 21 range with uh, market flow and two fast trigger lines. And then there's another one for an 8 range chart if you're doing S&Ps or crude oil. But you should have those chart templates in there. All you have to do to apply a chart template is right click on your chart, go down to templates, click load, and then you can do that. And then if you don't want all the fibs on there, you can always take them off. I've got a generic version without the fibs on there as well if you don't want the fibs, synthetic fibs. Again, look, these fibs that are on this chart are the exact same fibs that are on this chart. So again, I just want you to see the two of them head to head. The 13.2 chart has resistance up here at 62, and then so it's the exact same. So I don't know why you would want to get rid of it. So you can actually see it on the chart, but if you decide you do, that's okay. And if you guys would like a copy of my workspace for the NASDAQ, I'll be more than happy to share it with you. Wayne, you want to turn the fib lines off? Okay, so do this. Just go right click on your chart, go to indicators, and you really need to leave the original T3 Fibs Pro Trader on there because you got your mid bands and you've got your outer bands and you've got your one-to-ones. So you can't really get rid of the Pro Trader. The one that you're going to want to get rid of that's extra is the T3 Fibs Pro Trader Synthetic New. And that'll get rid of the extra fib lines on there if you really want to. And if you really want to, you can get rid of the Pro Trader, but to be without the outer bands or the one-to-ones or the mid-band, I would freaking die. And look, let me show you why I say that. Just for grins and giggles, bear with me here. So this is TradingView, which uses the same drawing engine that we're going to have on our platform as well. And again, look, when you look at a browser-based platform, and this is not ours, this is TradingView, but I've written the outer bands, the mid bands, the one-to-ones, and the divergences. Where are my divergences? Uh-oh. Why do I have a... Why is that not coming in? So I've written everything except for the fibs for TradingView, and we've also written it for our own platform. And in this version, which you guys are going to love the browser version when it's released here shortly, we've got dynamic Renko bars in it. We've got everything that NinjaTrader has in it. So you'll be able to just log on to any browser and go. It's going to be freaking awesome. You guys are going to love it. Anyway, long story short, if Mark and I were putting together a trading plan for TradingView. And the reason why is because our funding business is, the majority of people use TradingView nowadays anyway for the funding business. Anyway, but look, the same things that we teach, in NinjaTrader are true here. If you get one-to-ones outside the outer bands, it's usually a low. If you put in a higher divergence, it usually goes up. If the two triggers are going up, you usually get a run to the upside until you get to a prior divergence line. And then ultimately, prior divergence, lower divergence, sell the mid band, you get down to outer bands and one-to-ones, which is the target. And then ultimately, outer bands and one-to-ones hold, and we close back up, and we get strong triggers, and you can buy the mid band, and you can make a bunch of money to the outer band. And then ultimately, as it gets above again, you're able to go, below the triggers and starting to close above the triggers from the mid band. You go long again, and you can make a bunch of money. And then when we break out of the outer band, you can make more money. And then when we get double divergence, pivot stop outs at one-to-ones at the outer band, it usually goes back down. The mid band holds, the triggers don't break. It's literally the same thing that we teach you guys. And again, can you trade without the fibs on there? Sure, absolutely. Now, why would you want to? That's the question. Without the high volume lines and without the prior divergence lines, and we don't know where we're going. And again, you get that from the other charts, so you don't need it on that chart if you want to skinny things up a little bit, which is totally cool. Um, anyway, long story short, we're probably going to head down, like I said, until we get down into this zone down here. We'll see. Or we have some type of termination condition. And then when we get down here, we'll see, or if they make it down here, which, we spent, yes, Wayne, you can. If you right click on your chart and go to indicators, the T3 Fibs Pro Trader plots the outer bands. And the only reason you don't see them on the other charts is because the color, if you go down to T band, bottom and top, the color for those things is transparent, which is obviously you can't see anything because you can see through it. So if you just change that to white on the colors for the top band and the bottom band, you'll be able to see those on your big chart. Now, I do have to say that the dynamic Renko charts are not great with the outer bands like a range bar chart, minute charts, and other types of charts. And the reason why is because it's a synthetic bar structure that it just doesn't have. Did it not even plot? Did I mess up there? Might have messed up. I don't know if I actually saved that. Oops, no, I forgot to change color. What the hell? Anyway, yeah, it should work. I don't know. Anyway, let me refresh that. Anyway, you're going to find that the outer bands are damn near worthless on the dynamic Renko bar charts, is what I'm trying to say. So, not that they don't get hit every once in a while, but they're not very beneficial. You don't need them. Look, I'm of the opinion, and you guys can say do what you want to do, but I'm of the opinion that if you don't use it for a signal, just don't have it on your chart. It's better that way. Look, now we can probably start thinking about resuming the uptrend. We'll see. But notice how we had divergence, pivot, stop out, which doesn't kill the trend. But then we have a higher divergence, which is a warning sign that we might be killing the trend. 100%, Jerry. It's going to, I actually had pictures. I'll share pictures next week. We'll go through this stuff. Anyway, look, when we look at our large chart, we ask ourselves a question. Do we really want to go long? There's long signals on the small chart right now. So watch. This is right here, potentially the long signal to go back up. And this is why I use the range chart, because it tells me faster that we've run out of momentum, and that, if you're going to take a chance to go long, and look, we'll do it.
Order filled.
We'll do it and we'll see what happens. If it loses, it loses. But, remember the idea was that we were going to get up to 62, give or take. So when you're looking for a reason to start getting long again, for me personally, this is the reason why. Now, when I look at this is the upside downside of this market flow chart. So the downside is, look at this chart. Does that look like a long signal look to you guys? I mean, if you just look at this chart in a vacuum, should I be long? Hell no. Not just no, but hell no. Now, we do have a little bit of unfinished business up here at the top. If I was to put in divergence from 1-to-1s, I would get out of that position. But again, this is where the small charts, for me personally, help out, I think, a lot, because, again, you can start to see remember yesterday I had told you guys you can't see change coming. I guess that's 200 bucks on one, right? So we'll take
Order
200 bucks
canceled.
on one and get to break even. In the user guide on the website, we had discussed. Bear with me. I'm going to pull it up. And again, this is where it's a little bit more advanced for the new users. But when we were talking about termination conditions, and we talk about areas and conditions that might stop the market from going up or down. And in one of those conditions is any three divergences in the same area. And let me find the picture so you can see it. Um, again, man, I totally forgot last night to make these bigger, but hang on. I'm going to make it a little bigger just so you guys can see.
Target filled.
Uh-oh, target filled. So I wasn't even watching, but we hit our target at 62 apparently. Let me go back and we'll look at the chart here in 2 seconds. All right. So anyway, there you go. That's a pretty easy little, you know. So look, this is the termination condition. Three divergences right here that says, hey, we might be going higher. So when we have fibs that haven't been reached and we have unfinished business and the small chart finally gives up and says, okay, we're done, then we get that long trade to get up to the rest of, resistance or wherever we were headed to. Does that make sense? So we're, again, for me, it's a little more of an assertive trade because, we're like I said, it doesn't look like a long trade from your big chart. So it was a small chart termination with the market flow helping me out to go long at, what the hell? Let me see what we did here. So it went long at 44. We took a couple $100, and then we hit our profit target, and then that's the end of the party. Anyway, pretty easy run to get the rest of that move. And, again, this takes us back to our lessons yesterday. Remember, we had talked about yesterday Fibonacci resistance. And there's two words that you guys, location and momentum, when we're looking at our trigger lines. So, first, location. Did we have any trigger lines whatsoever get above that red line? Any trigger lines whatsoever? No. So, number one, it becomes a freaking awesome profit target. And then number two, it also will become the spot that potentially you can start being more assertive with short trades. And again, this is where, for me, on my way of doing things, again, look, divergence from a fib, white paint bar that closes below, and then I get a one up, one down, which for me, that's a pretty good potential first entry to go the other way in my trading plan. These are all good questions. We're starting off with 3 live accounts, Jerry, and then on a per person basis, we will evaluate whether we can have more. Number one, I'm not going to let people buy 20 accounts and blow out 20 accounts at a time because I actually care about people. So if you get 3 accounts and you start making money consistently and you want more accounts, totally cool with it. But I'm not going to let people blow the shit out of themselves. And then we're also not going to let people trade 17 or 20 contracts with a $100,000 account. It's probably going to be limited to 6 or maybe 8 contracts because we give a shit. So we're going to do things a little bit different. Look, I love fees. Don't get me wrong. I want to make money from people, paying fees, but our goal is to make people win. Our goal is to have winners, not just a shit ton of losers that pay the bills. So we're going to work really hard. You know, if somebody is losing, we're going to help them out with some rules and some plans and, you know, some of the other cool stuff that we do. Like, let's just say they're not a Nexgen user, but, you know, maybe some fibs, triggers, and one to ones might help their life out just a little bit. Um, anyway, did you guys see? I had told you guys yesterday I had bought my Bitcoin back finally. Anyway, sorry, I got off topic there. Anyway, so far so good. I think it's going to 69, says the big chart, 70. So from 60, 61 up there, that's about 8 grand on a Bitcoin. Anyway, all right, off subject. Anyway, whenever you get a top, you know, again, you get a short, and then if the triggers are strong, it's probably going to keep going down. And I'm just going to take a wild freaking stab at this and say we're going to go down to the blue fibs. I don't know. From the red line to the blue line is probably where we're headed. And there's two basic entry opportunities along the way using the market flow thought process. And you know, again, look, if you got this long and then you get this short and it goes down to a blue fib, you're done for the day. I mean, literally, you can be done. So, you know, again, look, this is my trading plan. And again, you don't have to trade my trading plan. Some people like, you know, a combination of what their plan is and what they like, and then a combination of what we teach. Ron is a perfect example of that, right? He's learned all of our trades and he knows what to do with all the trades, but he says that this is the look and the one for me. And that's really what you guys have to get to when you're, uh, you know, when you're looking at the market and you say, look, this is the area, the look, the location that I will start doing XYZ. And now you can see we've got trend trade potential. There's momentum potential from the top. So, you know, the NASDAQ is a very momentum based market. So those two circles represent, you know, opportunities to the short side. Well, the market's not even open yet. I mean, technically it's open, but anyway, it's almost magical the way the fibs stop the market. You know, it's not just the fibs, it's the fibs and the conditions of divergence, pivot stop outs, location of triggers, because not every fib's going to hold, right? So, again, just to be clear about, you know, we don't expect every fib line to hold. If it did, the market would be stuck in a range forever. So, fibs are going to break, and we have to evaluate, you know, when we get to a fib, we have to evaluate location and momentum. So that would be your profit target for your short trades if you did short trades. Did anybody do short trades? You did? Cool. Cool, cool, cool. And look, we hit our target. There's the blue line. Now, we have to evaluate, is it going to hold? You know, and again, as we trade into the blue line, I would definitely take money. There's nothing wrong with that. So we have to watch location and momentum. And right now, the location of the triggers doesn't suggest it's going to break. The momentum says it might, but the location says not yet. So, you know, and again, this is where the market will make a decision on whether it's going to stop here and go back up. Oh man, come on, John. I moved my little words over. And that's why we will have a browser platform sooner than later, because there is nothing worse than that. All right, give me 2 seconds. I'm going to reload my NinjaTrader. Jonathan, you're up a grand? Awesome. Wayne, go to your chart, click on it, and then click F5 at the top of your keyboard. Because when you click F5, it'll sometimes NinjaTrader's data, because it's multi-threaded and the indicators are multi-threaded, it just doesn't sync up real well. It doesn't pick up something. And if you click F5, it reloads the Ninja script on your chart, and usually it'll sync the data up as well. Okay. Yeah, I know. But just trust me on this one. Just click F5 on your market flow chart and see what happens. I know things. Trust me. All right. Anyway, all right. So, again, look, when you're building a trading plan for yourself, the first part of your trading plan is always going to have trend trades. And, um, you know, when you're doing trend trades, you must have the one thing that we talk about all the time, always and forever, and it still never changes. You can talk about it every single day. Your bars on the big chart have to be physically below the large triggers that are crossed down. And the bars on your big chart have to be above wide large triggers going up in order to do long trades. All right. I rebooted my microphone. Did that work? All right. Very good. All right. So everybody can hear me? Testing, testing. Okay. I rebooted Discord's mic. Is that good now? Cool. All right. Hopefully it's good for everybody. I see it working. I see it in the recording working. Bear with me 2 seconds. All right. Give it to me, guys. Can you hear me? Yeah. All right. So I don't know why Discord does that sometimes. They had an update yesterday, and maybe something got sticky in there. Anyway, whatever. It doesn't really matter. Um, Back to when to buy or sell pullbacks. Short version is price bars below wide triggers, you're selling. Price bars above wide triggers, you're buying. And it's universal. It doesn't matter what freaking chart on the planet you're looking at when you're looking to do this. If it's the 13.2 chart, if it's a 34.5 chart, if it's a daily chart of Tesla, it doesn't matter. Okay, I'm being frustrated with. Yeah, I don't care about losing the audience. There's nothing I can do about sound. I'm trying to reboot it. All right, what a pain in the ass. Bear with me a second. Okay, can you hear me? You have sound, Richard? Cheetah, you can hear me? Cool. All right, so can everybody else hear me? Moose, you can hear me? Good. Okay. Man. Okay, whatever. I'm moving forward. When we're looking to go long, short version is we need to have everything going up really strong, like we talked about in our trigger lines. So we want this look right here before we take long trades. When we do long trades, we need to have that upward momentum. We need to have our bar structure above everything, and then we're looking to buy pullbacks. There's basically two trades that you can do with Nexgen that are literally about as consistent as you're going to get with what we do. Oh my God. Okay. Okay. My microphone is working. It's working. It's working. It's working. So there's nothing I can do for those of you guys who are not. All right. I was going to drop one picture on you guys. And again, this is essentially the entire trading plan that you guys are going to be using with Nexgen. The first part of what we do is from a top. And when multiple charts agree to a Fibonacci termination atop, you're going to be quicker to enter at the top after the trigger lines roll. Okay. All right. So when we have a top, essentially a short version is we're looking to get in as quickly as possible. An HVA line or a momentum trade after a top is what we end up with. Testing, testing. All right, this is my last attempt to try to get the damn thing to work for everybody. I can't do anything else. Ah, jeez Louise, man. I swear to God, I have never had this week more technical freaking issues with sound in my life. I mean, I've done this for 20. We've run a chat room since 2000, and never once have I had this many freaking audio issues. Anyway, when we did our lessons yesterday, we talked a lot about Fibonacci areas that are going to hold, Fibonacci areas that are going to break. And, this one picture, which I put in, which, again, I'm going to put it in again just so you guys have it. Um, the faster you are at getting in when the top says it's going to be true, the more money you're going to make. Now, you have two choices, right? Get good at reading the tops and knowing it's going to hold, and then you can get in quicker using the market flow, high volume lines, white paint bars, momentum trades, something after the triggers start to roll. And then, as a new user, you're waiting for this top to happen. And then, really, as a new user, you're waiting for this. You're waiting for very strong momentum phase of the triggers. And when you get that really strong momentum phase of the triggers, you're looking to sell a pullback to resistance, either at fibs, divergence, mid bands, whatever, with the triggers to get down to Fibonacci support. And then, if and when you get to a Fibonacci support that says it's going to hold based on trigger line momentum and trigger line location in combination with a termination area, you can start going the other way. Now, you don't want to start going the other way at the top or bottom. We will need to wait for a little bounce and a little confirmation. And then ultimately, if we get the opportunity with the market flow or some of the smaller charts to be able to use the high volume area lines, a momentum trade, or a white paint bar type trade to get the market going up. And if you're lucky enough to get all that money, once the market gets really strong again, then you're going to continue trend trades in that direction. And this literally is your entire trading plan. If you're brand new, print this out, put it on your wall, laminate it, do whatever you want to do to it. But this is literally the visual of your trading plan. Now, there's more specifics to a trading plan, obviously. So, again, when we talk about areas that are going to hold or break, all right, we can go back just a little bit on the, there's so much action already today. But short version is we had some news at 8:30. And look, even when news happens, guys, our software still works. It's just the market moves so darn fast, you're not going to be able to actually take advantage of it. I mean, I literally want you to think about something. This high, and again, look, this is good for lessons, but it's untradeable. So I want to go in and say that this is 100% untradeable at this. We had red flag super, news that came out at 8:30. So look, this is 8:30. Oops. Just to give you some perspective. This is when the news came out at 8:30. And just trying to get to it. This is 8:31 a minute later. So in 60 seconds, literally in 60 seconds, all of this happened. So again, I don't want to say that this was tradable. What I want to say is that the software reading and the things that we do are still the exact same, regardless of how fast or slow the market reacts. So when we get to fibs with divergence, the market usually will go down to the midband. When we get to the midband, we ask ourselves a question. We say, hey, Do we have all of our triggers below the midband, or is there half above, half below? And again, if there was divergence on the low on the small chart with a 50-50 look, we would not take a short. If there wasn't, we'd take a short and have a loser, which is okay. And then ultimately, look, we're running back up again, and we have a very favorable trigger line look to get us up to resistance. Now we get to resistance, and again, remember the two words that I told you that are the most important when you're analyzing a top or bottom: location and momentum. And it's the same thing every time. So what we have to look at, and again, just to reiterate what we mean by momentum, um, again, what we're looking for, the momentum phase of the market is when the bars are completely below, right? So that's the ideal look for going short. And vice versa. This is the weakening phase of the price bars in relationship location wise. See how they're all inside now of the large triggers? Doesn't mean it can't go down. It just means that it's weakening. So we have to have some type of, you know, orderly classification on how we're going to analyze the market. So price bars completely below momentum phase, it's probably going to keep going down, okay? And then price bars inside, anything can happen. We could switch gears and go the other way. So when we look at, location and momentum, we also look at where the small triggers are in relationship to the large triggers. So the small triggers, when we look at it over here, are completely above. So if you look at it from the perspective of where are the bars in relationship to the large triggers, and we look at where the small triggers are in relationship to the large triggers, it's a very good chance that the market is going to continue in an upward direction. Everybody okay with that? And then very clearly, hang on, let me do this. Very clearly, when we look at fibs, we ask ourselves a question: where are the price bars inside of the large triggers? Number one. Where are the small triggers in relationship to the large triggers? They're inside. And then ultimately, look, within reason, there's not one trigger line above the resistance at all. So we start to anticipate that it's going to hold. And then, again, they do a really good job of coming down to support. And then the small triggers roll up, and this is where you get the second test. And they come up in second test a higher low a lot. And then you'll remember from our management section, remember what we talked about with a lower divergence? So now we have lower prices, a lower pivot, couldn't even get back to the high anymore. And then we start to go down. And then this is where we, with a second lower divergence from fibs, we say it's a good top, a really good top. And usually that makes the market go considerably further. So if you saw this, you may not have a short trade because the triggers are wrong. But ultimately, this is where new users are going to say, okay, I have all trigger lines, so we can use the same exact two words: location and momentum, when we reach Fibonacci resistance and pull back inside the large triggers. So we're going to read the indicators really slowly, really carefully. Obviously, it doesn't, this should be an instantaneous read for you. You have to get good enough at reading your triggers and your areas to say it's going to hold, it's going to break, I don't know. It's going to hold, it's going to break, I don't know. It's going to hold, it's going to break, I have to wait for something. So this is, you know, I would call it A plus plus plus. It's as good as it gets with next gen software. Period. This is the literal best look on God's green earth. You'll never get another one that's better. I wonder. Oops, I didn't mean to do that. Everybody understand that? This is the best you're ever going to get. Super strong triggers, plus fibs, long way to go to get to the next support. And then look, we go in and we say to ourselves location and momentum. Well, look, from 20 from 130 down to 02, that's damn near 30 points. And then with the momentum and, again, eventually we get through there, we make it to the next fibs. And then as we get to the next fibs, we say location and momentum. And again, it's a weakening. Look, the triggers are still weak, the price bars are weak, but it doesn't mean it's going to stop. It just means we'll stop going short when we get here, probably flat if you were holding on for the big one. And then you have to make more decisions, right? So we let the market make the decisions and the indicators make the decisions for us. We don't have to guess. We have to wait. And then the market says, hey, don't worry about it. We're cool. Let's try it again. And then you get the exact same look that we had up top. Check it out. The exact same A plus 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 look right here. So now location and momentum suggest that we're going to go down at least a little bit more, right? And then ultimately they say, you know what? We're done. That's it. We're done. And once you have a weakening trigger and you have divergence on the low, you better think to yourself immediately, you know what? The party might be over. Now, not necessarily going long. That's not what we're about, right? We're just not going to go short anymore at resistance once we put in divergence. So we're not going short because, again, look, we'll use the same location and momentum. Tell me where the price bars are located relative to the small triggers. Are they completely above them? If they are, there is no chance for you to go short and make a bunch of money. It's just not going to happen. I mean, you might get lucky, but that would have to be luck. So, does everybody understand what I just said? When the price bars are completely above all of your triggers and they roll up, the chances are the market's probably going to go up a little further. And you're going to have to wait until something easy happens. Now, nothing easy happens until over here. Now we've got a confirmed breakout of the market to the upside. Pretty easy, right? I mean, look, when we got to resistance, we look at our location and momentum. And the momentum is scorching to the upside. I mean, scorching. I mean, we're still only 9 seconds after news. So all of this happened in 9 seconds. So it's not tradable, but it's teachable because it's the same lesson regardless of how fast the charts are constructed. So the market does what it's supposed to do based on the indicators most of the time. Anyway, once we get to here, we're like, holy crap, we need to find a reason to go long. So from this moment in time, anything above here is a long. Is everybody okay with that? I can't spell, but you know what I'm saying. So anything above here that you can get your hands on is going to be a long trade. So, again, you can go back to your smaller charts and try to find where was that spot and did we have a long trade? Let's see, where was it? So, again, this is what it looks like on the small chart. Obviously, we had short looks with a nice look, and then we get divergence, and then they said, hey, party's over. Divergence that closes back above 1-to-1s is one of my favorite terminations. And then anything above here is a long trade. And obviously you can see what they did. They ran up a little bit. Ron C would be going long right here and taking 11 ticks and being really happy. That's his trade. Break out of everything. Anyway, all right. Let's go back to chart reading again because I think, look, once you get chart reading down and you're much more comfortable with your large chart on whether you should be going up or down, life is so much easier because most new users, and if you're new to us, number one, welcome. Sorry for any sound troubles this morning, technical difficulties I can't control. Um, when you look at everything together at the same time, it can be a bit overwhelming for a new user. Have you guys, has anybody gone through med school or taken the bar, lawyers and doctors? They didn't give you the bar exam the first week you got into law school, and they damn sure didn't let you operate on anybody the first week you went to med school. And it's the same thing with day trading. Do you guys know how much money is traded on a daily basis between the forex market, the futures market, and the stock market? Do you know what the sum total is every day of how many dollars change hands? Trillions of dollars. So I want you to think about what you're trying to do. You're trying to go up against people who are lifelong professionals at at moving trillions of dollars around every single day. And you want to take a little bit of something from them. Now, these people do not want you to take their money. They want to take your money, right? So everybody in the business wants to make money. And, it's a net losing game, right? Because it's not a net zero game because of commissions. So for every buyer, there's a seller, and for every seller, there's a buyer. And it's basically a net zero game minus commissions, which makes it a net losing game. And if you guys are familiar with net losing games, and I'm talking about Vegas, right? So if you go to Vegas and you play roulette, you have like a 48% chance of winning, which means they have a 2% chance of they're going to basically make 2 or 3 bucks for every 100 you play. As long as you play, and that's why they keep you playing it longer and longer. So when I go play roulette, I know we're getting off base here, but look, this is what I play every single time. I put 5 bucks here, 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 and every black that connects, I put them together, and then I put one with the black and the double zeros. And it's not a winning strategy. If I get lucky and hit some blacks and I double my money, I get the fuck out of there and I go play blackjack. But I don't put money randomly all over the board. I just put it in the exact same spot every time, and if I get lucky, I win, and if I don't, I don't. But I'm not, you know what I mean? I don't know, maybe call me anal retentive on consistency, but anyway, this is what I do, and I've got, and it's just if I lose 300 or 400 bucks, I'm done, and if I don't, I don't. If I make 300 or 400 bucks, I'll go run away. Anyway, consistency in the way you read your charts is the only way you're going to have a chance of taking those other people's money who are really good at taking everybody else's. So again, look, short version, we'll keep going. And again, when you read the charts correctly, again, when we get to resistance, we ask ourselves a question. Do we have location and momentum? Do we get above? We did. Was there a long trade? I don't know. If there was, it was short lived because there wasn't a lot of momentum in the triggers. And then ultimately they come down to the mid band with a 50-50 and probably put in divergence on the little chart. And then we get location and momentum that's more favorable for the mid band to hold. Do you see what I'm saying? And I'm not looking at the fib, I'm looking at the mid band. And when I look at the mid band and I ask myself the question, where are my triggers and what are they doing? It tells me, you know what, the mid band is going to hold. We can try to take some type of long trade if you can get it. And then ultimately we get to resistance. And we say, uh oh, location and momentum has now died at resistance, so we're not going long anymore. Right? And you know what happens if you're not going long, you're going to be looking for what? Tell me. Some type of short trade. Now, we're not talking about management or what happened on the little chart or whatever else because it didn't quite get to the target. Maybe it put in three divergences or whatever. We're not even going to go try to find it and figure it out. But there's plenty of room if your first profit target is 200 bucks to make 200 bucks plus before you have to even think about it. So you have a good top, divergent, strong triggers. You can make a couple hundred bucks without blinking. And then give it to me again, guys. The location and momentum. Obviously, the location and momentum is 50-50. Again, we see this a lot. Half of the triggers above, half below. So if there's no divergence on the little chart, you're going long. If there is, you're not, and you're waiting for something better. Right? Can I show you my 50-50 picture? I'm just going to show you my 50-50 pick. And again, just to explain it, because so that way you guys can see it. This happens a lot of times. And you have to get this, you have to really get this 50-50 look down, or else you're going to frustrate the crap out of yourself doing the wrong trade a lot of times. So, yes, the triggers are up strong, but a 50-50 look for you guys when you're reading your charts means that half of the triggers are above the fibs, half of them are below. And the trick is to not get overcommitted to longs. And if there's divergence on your small charts, this isn't going to work long. Is everybody okay with that? I know you've seen it a million times if you've been here a million times, but for new users, we want to see location of both triggers above the fibs to make it for sure. When only half the small triggers are above and the large are below, it's 50-50. And what happens is it's basically like a little fake breakout. And the minute the small triggers roll down, you usually resume the trend to get to where you were supposed to go. Ron C., thank you, sir. No, you know, look, I wrote the software, I mean, in the 90s, and it shocks the living shit out of me every day. I mean, I am so freaking amazed every day at how good the software does at calling turning points. And when you read your fibs and triggers correctly, I mean, it amazes me every day, and I wrote it. I mean, I'm still in awe. 20 years plus, 25 years later. I mean, I'm in awe. And if you use it and you take more time to learn how to read the indicators correctly, trading it becomes so much easier. And if you try to start trading right away on demo and you have no effing clue what you're doing and you can't read your charts worth a darn, you're going to just do a bunch of wrong trades. You're going to say, this sucks. It doesn't make any money. If I'm not going to be able to get it in a minute, then it's got to suck. Trust me, it works. And it takes time. It's going to take weeks and months of hard work for you guys, and maybe a year of hard work for you guys to make a bunch of money. But I promise you, look, unless you die in the next year, you might as well be good at making money. So if you slow your roll and say, look, this is a long term endeavor, something that you could literally do for the rest of your life. You could literally sit in your shorts at 65 years old, make $1,000 a day, turn it off, go live your life. Because probably shouldn't be counting on social. I mean, I'm 55, and I'm damn sure I'm not going to count on Social Security being there, saving my ass. Anyway, that's a whole nother ball. I don't want to get into that. But anyway, 50-50 look. Blah, I got off track. Okay, so anyway, when you see a 50-50, it's, look, it's super tempting to say I'm going long, and it's okay to go long with a 50-50 look until the little chart says it's not. And like I said in that picture, what happens is once the small triggers roll back over, you get back on the short trend after the little 50-50 fake out breakout. So you go short, and then you get a 50-50, and then it rolls back down, and you go short again, and then ultimately, we make it down quite a ways. We missed the fib by a couple ticks here. Close enough for government work. Cisco, I love that. And then look, divergence plus a higher divergence is one of my most favoritist looks on the whole wide world planet ever, ever, ever. I'm going balls in, full committed after I see this second higher divergence, and I'm going long, and it's going a long way up. You hear me? I mean, you can go. I want you guys look. I want to give you guys some study work, okay, for the weekend. And I want you to find this look on not only your big chart, but your little chart. Okay? So I'm going to give you a little bit of homework. I want you to find where you have a divergence and then a higher divergence plus strong triggers up. And the strong triggers can come later. They don't have to be at the time of divergence. So any two higher or lower divergences followed by very strong triggers anytime, come on, John, after the second divergence. What happens next? Is everybody okay with this? I want you guys to go find 40 or 50 of these, and you can do it on small charts, large charts, any chart you want. I got a little carried away with the size of that thing. Hang on a second. Got a little carried away. Because, again, look, once you read your charts and you say, holy crap, I'm going to make a ton of money, then you can really get long and hang on for dear life. So this is the spot. See the circle? Where all the triggers are up, both of them are up, and I expect a monster to the upside. Now, doesn't always happen, but I expect it anyway. Right? Now, sometimes they're dicks in the NASDAQ market, and they come down and give you a pivot stop out. And then you got to do it again. You got to start over. So that, I mean, and again, look, let's be realistic here. That went from 2002 up, it went up 20 points. So it went up over $400 a contract. So there's money to be made in there. But anyway, not all the money. Then they come down and stop everybody out because that's what they love to do and ruin everybody's life. And then it starts over again. And now you get divergence, higher divergence, and a pivot stop out. Now it's really going to go. And then, again, you start this uptrend that, you're going to expect a pretty big move. It's just, higher divergence, higher divergence, higher divergence again from a mid band that's supposed to hold. And then, up, up, up. And then we break a fib. And then the fibs are supposed to hold. And it's up, up, up. Anyway, long story short, eventually we're going to get to a spot. And you never know what the spot is. I mean, look, you're buying, 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 buying. You should be done for the freaking day at this point. But if you're not, then that's okay. But you should be done for the day. And then ultimately, look, we get to divergence with a pivot stop out, and we ask ourselves what happens next. And look, remember what I just told you in this picture. I want you to find it, two higher or lower divergences, and what happens next. So look, pivot stop out at a fib is not a lower divergence, but it's a damn fine top. And then look what happens. After a lower divergence, tell me if I'm crazy, and then the triggers get strong, which really happens over here. What happens next? You end up with a monster usually that gives you, and again, you have to keep things in perspective here. I have this kind of blown up, but from this area of 20, you went down 35 NASDAQ points. So that's 650, whatever round number. So there's over $600 available in here before, triggers get weak and you put in divergence, and then that's the end of the party. Now, flip it around, same thing in reverse. Divergence, and then, look, if there was no reasons on the small chart to think we're not going down, then you're going to get a long trade. And then as we go forward, this didn't really happen from anywhere. It kind of happened out in the middle of nowhere. We went down. This is where you'd expect the mid bands and fibs to hold until they don't. And then ultimately, repeat process. All the triggers are up. All the triggers are above your mid band. They horse around. Look, here's the pattern. 2 lower divergences. See it? So when the triggers get strong, we ask ourselves what happens next. And we get, a push to the downside. And then they retest fibs. 50-50 look, right? Half above the fibs, half below the fibs. So, if there's divergence on the small chart, we will not take longs. If there isn't, you'll take a long and lose one. And then ultimately with a 50-50 look, when the small triggers roll back over, you'll resume the initial trend, which was down. Small triggers roll down, so this is where you would get back into your short, trying to get some more money to the downside. And then ultimately, we have fibs that hold, so we're not going long into fibs. And we're trying to figure out what's going to happen next. And we get, another push down. Mid band's supposed to hold because the triggers are still down. We get a low, this is your second lower divergence look. I told you guys to go find 50 of these. But anyway, it's really consistent. After that second divergence, which is true right there, with all the triggers down, you're going to be able to take a short and try to get a pretty big move out of it. So this is a more traditional fibs from divergence, divergence from a mid band. Now you get a bigger move, just a little bit. Just a little bit of a move. Is that okay, guys, on the chart reading? I mean, it's pretty clear, isn't it, that once you have divergence, lower divergence, triggers are down, you're trying to find a short. And maybe you're out at support, and that's okay, no big deal. And when support gives way, you get one more shot, one more bite at the apple to the downside, which takes us all the way down to this big pile of blue things. And then we, again, you're going to stop going short. Maybe you go long, but the mid band holds. And then with all of the triggers going down strong, you're going short again, I promise you. And ultimately we get to a fib that the triggers suggest that's not going to hold. So, remember we talked about location and momentum? So the first time we get to this fib, right? The location of the triggers and the momentum of the triggers is not good for going long. It's okay to take some money at a fib, but we're not going long. When we look at the same fib area the second time, look at the location of the triggers and the momentum of the small triggers. So this becomes a very high probability area to hold for support. And again, this is where, as a trader who uses the market flow chart, white paint bars to go long, I'm looking for some type of reason here to be in more assertively to go long as quickly as possible because I'm expecting it to go up. If you're a trend trader, you're waiting for this area right here to go long. Does that make sense? So you're waiting for everything to break and everything to be above, and then you're going to get a long trade. And look, 10 points. This right here, watch. From even 100 to 110, this is $200. So from the low to the high, that's plus $200. Can I ask you guys a question? How much money do you want to make in a day on just one contract? We won't try to make it difficult. We won't say multiple accounts or anything else. We'll just if you're trying to make between $200 and $1,000 a day a contract, it is not that difficult. All you need is the trend trade for $200 to $500 a day. You can always trade two contracts or four contracts if you want to make more money. But look at how easy and instantaneously you make $200. Now, there's more money to be had, obviously, as we get up close to resistance. So realistically, there's probably closer to $400 in there. And then, look, same words hold true when we get up to a fib. Location and momentum. Do we have enough momentum to hold on to a long position indefinitely? I don't think so. Right? So this is where things on the smaller charts, divergences, pivot stop outs, third divergences, those things kill it. Now, fear not, because again, when we get to a fib, we say location and momentum again. And we say, okay, momentum is kind of down, but the location is well above, so I have no clue. So we wait. And, again, now we've got location and momentum a little more favorable at resistance, but we've got a lot of support here that we got to worry about too, so we'll have to see how it works out. And obviously, the market is never wrong, is it? Everybody okay with this? Location and momentum is the answer to your issues. As long as you have the right momentum and the right location of your trigger lines, you're going to do the majority of your trades in the right direction and everything's going to be okay. And, again, further short trades to be had until you get to fibs. Now, just because you get to fibs are a target. They can be entry areas, but they're also your targets. And it doesn't mean go long just because you get a little up bar. We want our triggers to turn, right? Or something. So eventually, the market is going to do the right thing. You don't have to do the right thing. You just let the market do the right thing and you follow along with it. So eventually, we get divergence with weak triggers. And then whatever happens here next is going to determine what happens. I don't know what it is, but we'll find out. So you can see we start to break above, and lo and behold, location and momentum wins out again. Let me copy paste that. Am I crazy, or do you guys see the same thing I see? Once you get the areas and the location and momentum right, then you can start looking for trade setups. So if you're the whole point of this long-winded, let's review what happened on the charts, is so that new users stop looking for trade setups while you're on demo on day 1, 2, 3, 4, because there's no freaking way you know where to trade. You have no clue what the right read is. So you really need to spend a lot more time working on your large chart with location and momentum and getting that look down first before you try to trade. Because if you trade and you lose and you're not doing it right, you're going to get frustrated. And then you're going to end up doing something really silly, which is called quitting. Look, we have the golden goose. And if you try to trade it before you learn how to make it lay golden eggs, you're going to basically deep fry the golden goose. And you might have a goose dinner, but it'll never lay the golden eggs that you're looking for. So don't deep fry the golden goose. Feed it, teach it, learn it, and let it lay those golden eggs for you. All right, location and momentum said up, didn't it? I didn't look, we're live now. So now look, you can see it just hit. We got a fib with a location and momentum problem, don't we? That's the spot where it might be over temporarily. Can you see it? Is it me or, I mean, hopefully you see it. We have a location and momentum problem right there. Am I just lucky? Or I don't think I am lucky. All right, so look, we're about to have another location and momentum problem. The location is the big problem here, but this is where the location and momentum problem will probably make it go back up there eventually. I don't know if it's going to be from here, maybe a little bit lower, but at this moment in time, we have a location and momentum problem with our fib and our midband. There's nothing that says we're going down any further at this very moment. We can, and we will probably go a little bit deeper, but they're going to battle it out here. So anytime you get to a fib or in a support area and the triggers aren't past it, there's going to be a battle. And I don't know who's going to win the battle. I don't have to know who's going to win the battle. There's just no reason to have to worry about it. So anyway, if the support holds and this chart says we're going back up, then we will. So we'll see. If not, we'll come down a little bit deeper and we will, we'll see what happens. All right. Now, you guys post in any pictures and trades. We'll go through any of your stuff real quick and I'll make sure that we're looking at. All right, Gary, it's hard to see, just a little smaller, but everything was going up with momentum. You bought a break out of the fibs, which is very Ron-ish thing to do. Right? Ron C, this is basically your trade for the most part. That one's a little early based on your rules, but that's okay. I know your rules now. I don't like that trade. I mean, I see it, but it just gives me the heebie-jeebies. I just don't. I don't like it. Whatever. It doesn't matter. I love it for you. And let's see. This is exactly what I was talking about. This is your trade, 100%. You even wrote the rules on there for everybody. Ron, that's really sweet. So his rules are, guys, look, the low of the bar has to be above the fib with strong triggers. So he just gave you his whole trading plan right there. We call it the chili dog. I don't know how the hell that came into being, but anyway, do you guys understand? Look, we'll go through somebody else's trade and trading rules, and you don't have to do it, but the visual on it's really easy because it's the same thing I was telling you. We have strength and momentum starting down here. The triggers all are getting above the fibs. The price bars are completely above the fibs, and there's room to the target. Yes, sir. Oh, okay. And then obviously with that strength and strength on the small chart, he gets in and he takes 11 ticks every time. Not every time. He has losers. Let me rephrase. I know he has losers. One trade equals a chili dog for lunch. Yeah, not really, because when you start doing four lots and make 440 bucks at a time, and you do it 4 or 5 times in a day, you're making a couple grand a day. But look, this is the trade that he likes because it's very high probability because there's so much momentum that you usually get a little bit of follow through, and he's not greedy with his targets. Everybody give me a yes or a no. You understand Ron's trade now. Ron, I really appreciate you sharing the rules like that too. That's freaking awesome. Yeah. I mean, is that simple or what? So look, there's a couple other clients who do other types of trades. So, but again, you have to first learn how to read the software. Look, for me, this is the long trade over here, right? Or even down here, momentum long trade. So, for me personally, I would like to get in a lot earlier. But, again, that last little piece usually works out real well too. So, well, look, to each his own. You have to do the trades that you're comfortable with. All right, so Mike is your trades. And again, look, momentum trade long. I love it. You take some money, and when they lose, you know, when you do a momentum trade and they lose momentum, you have to get out. And I know it sucks, but 2 bars down, it's usually over. So, but you put a break even in, no big deal. And then you let the whole thing work itself out. And then ultimately, maybe right here was the first one, but you get the second momentum play, and then you get the rest of your money. Love it. And you're using the market flow one down entry logic on that, right, Mike? That's my logic. I love that logic. I love the crap out of it. It works. I mean, it works really well. Really, really well. The hard part is hanging on for all the money. When you have this much momentum, there's no reason to get out early of the first one. Usually you get all of it. Anyway, that's just my little 2 cents worth. Mike, I love this picture. Obviously, it's out of my trading plan too, so I love, 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 love. And look how easy that is. Easy money, baby. And look, Ron's trade would be over here, maybe. A little chili dog to get up there. Anyway, all right, I'm moving on. I gotta mute my phone. There we go. All right, so moving on. Jay. What the heck? Jay, why can't I get your picture? There it is. Okay. Same exact trade that Mike did. Momentum up, bought a pullback, one down with the triggers up with a high volume area helping, and you held on for all the money, most of the money. Absolutely freaking gorgeous. Love it. That's the easiest trade, I think, personally, that there is in what we do. Triple momentum on triple charts with the 1 bar pullback. I think that's the easiest trade we do. Anyway, for me personally, that's my number one for what it's worth. You guys did an awesome job on that. PFI, let's see what you got. All right, so I'm missing some of it. All right, so everything was going down and you did a short trade. So you did a short trade, lost $100, and then you did a short trade and made 300. Awesome. Nicely done. I have it, Ron. I already know it. Okay, no worries. I appreciate it. Look, I make it my business when I see other people winning and doing lots of other stuff to try to figure out what they're doing. So, anyway, we have ourselves some resistance. We'll see if it holds or not. The problem with this resistance, not really a problem, um, resistance, and then when we get to support, we have to ask ourselves the question location and momentum at the fibs. And they have quickly said that they don't care about the fibs. It's a great profit target area for short trades. Again, look, without the benefit of little charts, just making sure that you've got fibs that hold up here, which is the top, and then you've got strong triggers down, which suggest we're going to make it to the fibs. And then when we break the fibs, we get that same A plus look that we just talked about. And we also just hit fibs with weak triggers, so that's over. Just that fast. It's quick on the NASDAQ, isn't it? So short down to the fibs, short down to the fibs. The fibs have, and again, I can write it out, but hopefully at this point you know it. Location and momentum says party's over, and we're probably not looking for long trades just yet. We got to clear this area real quick. You know, Depending on the smaller chart and the market flow chart, maybe there's a trade, maybe not. But once we clear this top right here, then we'll be free and clear to really take it to the upside. Right now, it's not super, location and momentum. The momentum is up, trigger line wise, but the location isn't great yet. Do you see how we have a 50-50 here? So half of the triggers are trying to get above the area and half of them are below. So this is where the smaller charts are going to come into play for us. And they're going to either help us out or they're going to hurt us. If there's divergence on a 50-50, we're not doing it. So you have to wait for things to roll back over again, which they now have. So
Order
look,
filled.
something like this would be the first attempt to go long. You see that? And then, once you get to a pivot stop out, it's probably good not to lose a bunch of money because they'll go back down again. But anyway.
Stop filled.
So you can see we kind of ran into some trouble, which makes it difficult. So that was an assertive first entry. Now watch. We're going to need a little more out of the market to get a second attempt at it. You see that? So again, they're working the area over a little bit, and then ultimately, here we go.
Order submitted.
We're going to end up with.
Order filled.
I'm going to go a little bit early just because.
Stop filled.
Oops. Yeah, we're going to do that twice.
Order filled.
Okay, up bar from support. Let's take it up to resistance. If they make a lower divergence, it's going to lose probably. So I should be out. I'm not out, but it's going to lose probably. We'll see what happens. See how the triggers are down and we have divergence? The only reason I'm not out is because of my market flow chart. I was trying to give it a chance to hold.
Stop filled.
It's not going to. It rolled over on me. Really fast. All right, so again, location and momentum. Now, what's the next thing? Remember the study picture I asked you guys to do? So do you see how we have divergence on the low? That's a first warning sign that potentially that low is good. Um, we have a second divergence from the same spot, which is a warning that potentially it's good. And then what we're looking for is a breakout above this area right here before we commit to any more long trades. Does that make sense? So we're looking to break out of this resistance. And if we do, then it'll be pretty clear. And if we don't, then they're going to end up going lower. So we have kind of a line in the sand, so to speak, that we're going to have to get past. Which I think they're going to, because it looks like we've put in a pretty good bottom so far. All right, and then now once they get going, again,
Order
look,
filled.
I'm going to take a shot at the long trade one more time. We'll see if it loses, it loses. But that's a better long trade for what we do.
Target filled.
And there's the first target, and then we have to ask ourselves: do we want to try to stay in for more with the strength and momentum in our large chart? And if the strength and momentum says, hey, maybe you get a little bit more out of it, then it might be worth holding on for a little bit more. Maybe you get more, maybe you don't. We're about to find out. That's about where I'd say. So a new bar up. Now we'll see if we get the rest of it, or if they take it out. So we've got 200 and plus locked in. As long as we don't make a second lower divergence. There's 500. That's pretty good.
Stop filled.
All right. Damn, that was fast. But we have news or something? Anyway, we made a little money on that. Obviously, the NASDAQ is insanely fast, and you have to be really good at your trading plan. Support holds, but resistance holds. So we are stuck monkey in the middle waiting for the market to figure it out here. You see what I'm saying? Now, the second time we get to support, the trigger lines are much more advantageous for going long on the big chart. So this is where, potentially we do something a little more assertive from the long side if you want to, or you wait for resistance to break and do something. But traditionally, this is where,
Order submitted.
a high volume line, I think I missed it. Dang it. Anyway, I missed it.
Order canceled.
Anyway, this is probably my entry right there. Now, we would have to be very quick to manage because we have issues like a pivot stop out. So if it holds right here, then that's going to be the end of the party. If this area breaks, then we're going to see a lot of continuation to the upside. So we'll see if, we can start breaking above this area or not. And there you go. Anyway, hopefully you can see that, the second time we hit support, which is always the better of the two, the location and momentum of the triggers was really, really good for going up, and that's why you would take a more assertive approach. And then ultimately,
Order
look,
filled.
this is the spot where your trend trade is going to happen from, hopefully. And we'll see if they're going to go or not. If they don't,
Stop filled.
oh, yeah. Those are the ones you got to do twice.
Order submitted.
You're going to end up having to do the same trade twice sometimes. Because, again, look, I got long here.
Order filled.
And, they stopped me out below the pivot. And then ultimately, usually they're going to go finish the business that they started the first time. Um, you don't really have to risk a lot of money here. If it gets below there, it's probably party over. Yep.
Stop filled.
See how we made a lower divergence? So we lost a couple ticks there. No big deal. Anyway, they're just being rude. They're being difficult. All right, guys, answer the question. Mid-band with our triggers and momentum, is there a potential that we hold here? Just on the big chart. So we're still working our way up from support, and they've come down a little bit further, and they're going to let us know here in just a second. That was such a good long in this area. Too bad it didn't finish. It will eventually. They may come back down here and ruin everybody's day and stop everybody out because they love, love, love to do that to people on the NASDAQ. Location and momentum. I would be surprised if they don't take out that low, but anyway, if they don't, it's okay. We know that we hit support, so we're not going short anymore, right? Hopefully, everybody knows that. We're not going short. Um, this is our line in the sand. It either has to break to continue the long trades, or this will take us back down one more time down to here, which I would prefer us to go back down to here one more time from up here, but we'll see. I don't really care what happens, but looks like they are done and they are going up. Ron, this is your chili dog coming up in just a second. All right, so look, we're going to try to
Order
get
filled.
long one more time with our momentum to the upside. I'll give it a couple ticks just to give it a little room here. And again, we're trying to get up to at least here, and then we'll see. Man,
Stop
they're
filled.
really not going, huh? God dang it.
Order submitted.
All right. Usually, look, the second time you do a trade, well, they're still not going to go. Rude, rude,
Order
rude.
canceled.
Okay. They said they were going to go, and they lied. So that means they're going to go back down and take out the low again and ruin everybody's day. So watch. Right here, it'll probably go back down and take out the low. We'll find out. If they're nice about it, they're going to get down here from right there. If they end up putting in a second higher divergence, then we'll get the big one that we were looking for. We'll see. I'd almost bet money they make it to the low, but if they don't, then, again, unfortunately, with support holding, you got to do the same damn trade twice sometimes, and sometimes the little bastards go without you, and they just made that difficult. The read was correct. The trading didn't work out so well. We got a little loser, and then we got a little bit of, a couple small losers. And again, this is just part and parcel to NASDAQ trading. If you're going to trade the NASDAQ, you have to get used to the idea of having two or three losers in a row and then getting the big one after that. And that's why you can't trade over leveraged on the NASDAQ. Because if you trade over leveraged on the NASDAQ, you're going to end up blowing out your account during one of these little. When they lie to you a couple times, you'll end up blowing out your account. So it's really important to trade under leveraged on the NASDAQ. And you can see that they did what they were supposed to do. They just didn't make it easy to take advantage of it, which they do that sometimes. They're rude. All right. So fibs with triggers and locations suggest we still have one more push to the upside coming. We'll see. Might have to get to the mid band and might have to get right there first. All right. We'll see. I'd call that the line in the sand. If they're going to finish this move off to the from here to here, we'll see. It's not easy. No, there's no easy way to go long at this point. So I just, from a chart reading perspective, we'll see. And do you see why I'm suggesting that the midband and fib area is going to hold? Again, it's about the location of the large triggers and not getting up to the fib area that we probably are going to make it up to. Again, there's no easy long trades, but we're not necessarily going short. All right, Gary, is there a way to lose the NQ losses and just take the big trades? No. Nope. They all go together. All right, Gary. I'm trying to figure out what you were doing. You had divergence, then you went long, and so you were long, you got stopped out, and then you went long a second time and made all the money. Cool. Nice job. Yeah, sometimes they lie to us a little bit, and that's okay. And look, here is where the small chart's finally rolling back up again and giving
Order
us,
filled.
I would guess it's going to give us the rest of the move we were looking for. It's a little bit messy, but we'll see. I wouldn't let it get too far away from me. I wouldn't lose money at this point. See how we get to a fib and there's no triggers past it? I should be out of half of my position, probably, right there. Let's take
Target filled.
half there, and then we'll pull our stop up. Everybody okay with this? Look, they held like they said they were going to. The triggers rolled up, and we get ourselves up to a position where let's see,
Stop filled.
too close to resistance to mess around. They may keep going, but take a little money, wait for resistance to break, and then for me, one of my exit conditions, divergence from one to ones. It's just one of those exit conditions that, even if they go up a little bit further, I'm okay with it. Now, large chart. What is it suggesting to us, guys, with the momentum and location? It's suggesting there's a potential breakout coming, right?
Order filled.
I'm going to try it, and if there's divergence, I'll get out. So there's divergence. I'm going to get out.
Stop filled.
Breakouts are great until they fail. And once you have divergence from a one to one, like I said earlier, it is a strong termination. And you can see how quickly they said, hey, screw you, we're not going. So you don't have to lose a lot of money on a breakout. Once you make that little move right there, that's the end of the party. So you can get in right there and you get out right there and you lose this much between those two little lines. And then ultimately now, I hate to say it, but support's supposed to hold just like it looks like. I mean, I don't hate to say it. I love to say it. So we have the intention that support's going to hold, but there's no freaking reason to go long yet. So They may come down and poke it one more time, or they may even break it. I don't know what's going to happen. Elvis, the best thing you can do is either wait it out or get a faster computer. Those are your two choices. It doesn't take that long. All right, so we have broken through that area, have we not? A little bit. So, again, is that enough to say to ourselves full breakout, or would you call it a 50-50 with these large triggers way up here? Would you call it a full breakout or a 50-50? Remember, the key components in a 50-50 is what? Divergence on the small chart. Traditionally, when you have divergence on the small chart, you're not really doing 50-50 shorts. It kind of changed a little bit quickly, but so it's one I would skip. It worked. I'm okay with it. Now we're getting a clearer picture of what's going to happen next, aren't we? Everybody agree we got a pretty clear picture of what's going to happen next? I mean,
Order
I
filled.
would think momentum trades from the one to ones are probably going to be in
Stop
order.
filled.
And if they don't, I'd lose a couple of ticks, and then you'd have to take a second chance from over here if you get something, if you get a down close. Or maybe that's the end of it. Man. Those are usually so reliable where again, look, I'm going to show it to you on the little chart. Whenever you get everything below one to ones, you want to sell the one to one area on a pullback. I mean, it works out most of the time. And if it closes above it, you're out. So, I mean, you're selling on the way up, and you're only losing a few ticks if you lose, which is a very tight, tight, tight stop. They're being a little difficult here today. And again, when they get difficult, there's not squat you can do about it. You just have to really be selective in your trade setups. Full momentum on all three charts is the answer to every drawdown. Have you ever had a drawdown where you're like, damn it, I'm losing my money and I'm down $300 a contract? This is where, in my opinion, it's better to go to like for me, let's just forget about everybody else. I will not look for trend trades if I'm in a drawdown. Very rarely. What I'm looking for more often than not when I'm in a drawdown is something more like this, where we have an established strong trend in the market. And then we have a strong established, this is that same pullback to the one to one trick. And then we have a really strong trigger line over here. David, bear with me. The white paint bars are volume breakouts. That's the short version. And I'll show you a picture of that in 2 seconds. But I have a 33-minute video that goes through all of it from top to bottom. So there's the video that will go through this good stuff. But yes, I will post. I did post in my plans before the day. Bear with me here. Let me do this. My chart on the screen. Bear with me. So here is the everything you need to know to win money with Nexgen. And then here is my trading plan. David, I'm going to back it up. I'm going to back up the train just 2 seconds. Okay. I'm assuming you're brand new to what we do, right? No. Okay. All right. Then there's a lot of horizontal lines on my chart. Which one are you talking about? Are you talking about on the market flow chart or are you talking about on this chart? Oh, the white one? You're talking about this one right here. It's the reversal bar marker from the 34 chart superimposed on there. See that? That's all it is the reversal bar marker. So I have this template. I'll give it to you if you want, my template for the 13.2. All it does is it plots the 34.5 midband, which I love, and it plots the 34.5 reversal bar marker. And I think I have the 21 range fib on there too. If you guys want that chart template, I'll give it to you. Give me 2 seconds. It's just it's my little tweak on my chart template. Let's see, where the hell? All right. I'll put it in a zip file so this is my NASDAQ 13.2 template. Oh, here, I'll make your life even easier if you want. Watch this. But that's the template so you can build your own chart. But here is my workspace too. So make life easy. All right, so look, there was another momentum trade right here to get us up to resistance while we were talking. And look, same logic we were talking about before. Obviously, when you look at momentum and location, right, the fib might hold, but you start adding to it divergence. And then what did I tell you guys to study over the weekend? A second lower divergence. And then if you get a second lower divergence, this is where you can start doing momentum trades to the short side. So if the fib is supposed to hold because of momentum and location, and then you get divergence and then lower divergence, this is traditionally where you can start doing short trades until you get down to support. Everybody see that? And then when we get to support, we ask ourselves the question, momentum and location again. The momentum is pretty strong down, but the location says it might hold temporarily, which means that you have to exit your shorts and wait for the next something. If anything, I hope to God that this week has been very helpful for you on some of your chart reading more than anything else. I mean, trading is pretty, seeing a trade setup is not that freaking difficult in the long run, in the big scheme of things. Making sure you've got the right momentum and location, and you know that it's time to not go long until that breaks based on the momentum and location. That's really the important part. Hopefully the chart reading has been very helpful this week. I hope so. That's really my goal. Because look, if you do a trend trade and you got the right read, it's probably going to win. If you do J Blay like yours, you got out, but you got back in again. You're like, hey, wait a minute. Not going to let them have it that easy. I like the second entry. And again, momentum and location suggested up, and you went long. And the NASDAQ it's a booger sometimes. I mean, they run up and then they stop you out and then they go anyway. So sometimes you have to actually do a trade twice. It happens a lot on the NASDAQ. Some people run a lot larger stops. Personally, I'm not a big fan of that on the NASDAQ because I usually just end up losing a lot more money. I'd rather take a small little loss and then re-enter later if I get an opportunity. That's just my personal preference. Anyway, nice job there, Jay Blade. All right, so momentum and location suggested that the fibs were going to hold. And now we have the same exact thing here. Momentum and location suggest the fibs may hold again. So we're in chop, in a choppy zone right now, which is fine. It just means it's time to take a break. And, again, look, see how the small triggers are above the large triggers here? That's a real good indication that support's going to hold and we're going to go up. Hard to see that we're going up when everything's red, but when you really put it together, it's not that difficult. My guess is we're going up. I don't have to guess, but and I wouldn't go long when it's red and we're below everything, of course, right? We saw that yesterday. So they came back down, they retested the 1-to-1, the fib. At the moment, the location and everything else doesn't suggest a whole lot to us. We can't go long, still can't go short. So we wait. We're in wait mode right now, which means I'm going to take a few minute break. If you guys have questions, please, please, please let me know. I think we're going to make a low here. We'll find out in a minute. But so I'm going to take a short break. Be right back. You guys let me know if you have any questions. All right, guys, I'm back. As anticipated, we had talked about it going up from fibs. But look, I wanted to reiterate what I was talking about before, just so you guys can see it. The real key for me was the fact that the small triggers were physically above the large triggers. That was the warning, right? And that's really a pretty darn good indication that the fib support's going to hold, which we thought it might. And then obviously it held, and we went up to resistance, and then we repeat the process: momentum and location. I can't spell, but it doesn't matter. You know what I'm talking about. And when we got to the fib, hopefully you can see that the momentum was smoking, which means it might not hold, and it didn't. And then ultimately, we get a little pullback, and then we're probably going to finish the move off, up to the fib. So even
Order
without even
filled.
looking at another chart, I mean, I probably shouldn't do this, but the guess is that we're going to run up here with, again, without, we'll look at the little chart.
Stop filled.
Yeah. This is why you don't trade with just a big chart, because you have management issues on the little chart. See how we had a lower divergence? So shouldn't really have been in there anyway. At the moment, we're going to go back and retest the fib. Usually the second lower divergence makes it retest the fib. Um, you the majority of the time, this fib will hold, and then the second divergence will get you down to here. And then this is the next move that's coming. That might be it. Closing back above the one to ones. See that? That might be it. It'd be nicer if they hit the fib, but I don't know if they're going to. I'd love to see them hit the fibs first. It just makes life easier. If it doesn't happen, and if we were to put in divergence or something, then it'll go without us. No, it's probably going to go without us. So watch.
Order submitted.
I'll buy on a pullback into the area
Order filled.
with one attempt, and look, very, very tight. We got a third divergence, so the party's probably over. Because it's, below one to ones, I'll stick in there, see if we can get the rest of the party. As we work our way up into trouble spots, there's no reason to be risking a whole bunch of money. It's either going to go right now or it's not. It's either going to get the rest of that or it's going to fail. So basically, no risk to see if we can get to the next fib. We'll find out in 2 seconds. Here, we'll make it a true no risk. Again, if you want
Target
to take one
filled.
of them off, you can, but we made it to the fib. So anyway, look, hopefully when you look at the big chart, this makes sense that we were going to make it up to a fib. I have no clue what you've done with your chart there, Kevin. Take a picture and put it in. Oh, you did. Hang on. Let me look. Yeah, I don't know. Could just be a data discrepancy. Do you clean out your data in the morning? And do you sync up your time each morning on your computer? Because, Windows loses time. So 10 seconds here or there in the NASDAQ sometimes makes a difference. So just click time in the search and go to date and time settings. You're going to, like me, I synced this morning at 8 o'clock, 7:50 before I open my charts. So I go in and sync my clock so that way it's right in time. And, sometimes those little discrepancies. I mean, in the NASDAQ, it could be a data issue or something, but I don't know. Are you running my workspace or are you running your workspace? The funny thing is, I don't have any one to ones on my chart. So it's not you, it's me. I just realized I don't have any one-to-ones on my chart, which means my chart's busted. Look, whenever you get that, delete the chart. So it's me, not you. Hang on. I'm going to rebuild it. In Q. Shit, I didn't even know I had a busted chart. So, all right. NQ 34.5. Let me put it back on. I bet you I have all the indicators you have. I was like, you remember when I said, hey, my outer bands aren't working? And then I just left it alone. I should have at that point in time this morning said, hey, wait a minute. Okay, let's see what we got now. Check it out. I got the same thing you do now. Yay. So it was me, not you. That's why it's good to have a community in it. By the way, Big Dog is who I played golf with yesterday. My first time back in 4 or 5 months. I actually had my best 9 holes I ever had. I mean, absolutely freaking insane. It's the best 9 hole. We had lightning and rain stopped us after 9, but freaking 7 pars, 2 double bogeys. That's not so bad. I shot a 40. It's good. That's a good first 9 hole warm up. I'm looking forward to playing in the morning again. So we're going out 8:30 tomorrow. See if we can build upon. Shit, if I do that again, I'll be happy as can be. All right, guys. So it is now 11:10. Do you know where your kids are? First things first. We've got Fibonacci support. How many triggers are below it? The answer is none whatsoever. And it's not that we're not going to go down a little bit more and get, a little bit deeper into the window, but there's no way you can go short. At least not right here. So it may go a little bit deeper into the window, and then we'll have to see how they treat the edge of the window here, which is 35, 33, 50. Usually the mid band is going to make it go back up, and we'll get our second test of the resistance up here. You remember how we said we normally go get a second test of it? So this is the future. I drew it in for you. What I think might happen. Now, some people would, look, if you have a reasonable expectation of this happening, some people will say, hey, look, let me just
Order
go
filled.
long and try to get that money. Now, does that look
Top
right?
filled.
Oh, I was going to try to take a picture of it and say, hey, does that even look right? The answer is no, it doesn't. Now, remember what I told you guys about double divergences?
Order filled.
Second higher divergences. Sometimes I use those as an entry signal, by the way. Where, I get, and it may not go. I'm just playing around here. But do you see how we get a fib that may hold, and then we get a divergence, and then we get a second higher divergence? Traditionally, this is where I would anticipate, if you were being assertive, that the market's going to hold and go back up. If it doesn't, it fails, then it'll go back down a lot further. But this area should hold based on 2 higher divergences, now 3. And we should run up, minimum, we're going to get up to here, back to the triggers. We don't have to do anything, but the chances are we will. We'll find out in a second. Anyway, this is a very assertive long trade that is not for people who are not into that type of thing. And it may be over very quickly. Looks like it. Not going to go. They really have to go up right now if they're going to go. And if not, then the party will be over. But basically, I'm trading a termination condition on my small chart, 3 divergences. with the anticipation that, you know, it's still not going to go. Nothing I can do about it.
Stop filled.
Once we got divergence, it's over. Anyway, assertive trades are great when they work, and man, if it went from 42 up to 65, that's really what you're looking for with that trade. And again, sometimes the edge trades, the assertive trades just don't work. Um, that's one that I liked, and it just didn't work. It's no big deal. Now we recalibrate and we say to ourselves, let's see what we've got. We got more fibs and one to ones, and again, a spot to watch. And if it breaks, then we're going to be free and clear to do short trades, pretty easily over here. If it doesn't break, which so far it hasn't, we've got divergence from one to one, so we got to get below it to keep going down. So we really have a super line in the sand right here, so to speak. And again, if we get below it, then now your large chart agrees with what we're looking to do.
Order submitted.
Oh man, just rude. So you see how the large chart agrees that,
Order filled.
potentially we're going to go to the downside here. So again, I kind of sold the trend trade short at the spots after a down bar. Look, I got 2 ticks of risk. If they take that out, that's just going to be rude, but So I got 2 ticks of risk, 3 ticks of risk to make.
Stop filled.
They're just rude.
Order submitted.
Just rude.
Order filled.
All right. I'll do it a second time because sometimes, they're just rude and
Target
anyway.
filled.
So there's $200 plus.
Target
and
filled.
There's even more. So, well, look, I could have probably put a little better stop back here where the market shouldn't have gone. Would have been easier, but I don't mind doing a trade twice. So, anyway, I hate to lose, but I mean, I lost what, 3 ticks on the first one? So, lost 3 ticks, and then we made the rest of that. And now, again, anytime we get to fibs and a pivot stop out, we look at our triggers. Triggers are not super strong to the downside, and there's no room to operate. So, we're kind of in this, you don't have enough room to operate. You could probably get one more short in, but you're going to have to be quick about the short. So, for example, watch.
Order
I'll
filled.
go short, but if I make a divergence,
Stop
I'm out.
filled.
So I lost 2 ticks, 3 ticks just with the second divergence. My target is going to be down here, which it'll probably get down there anyway. If
Order
you close
submitted.
below all your triggers. If you don't, then it won't go.
Order canceled.
So I like the close below the triggers as the second option. I don't mind getting in momentum or at one to ones and fibs, the first time. But if the first time doesn't go, then you really have to close below the triggers if you're going to do a second shot at it. It's just safer that way. Yeah, we're going to have some fun. Yeah, yesterday I missed what, 4 or 5 foot birdie putts. 4, freaking awesome. Horrible. Anyway, it was awesome to have them, but could have made at least one of them. Anyway, tomorrow's another day. All right, short, and then obviously you got the rest of it. Nicely done, Cisco. Yeah, it was. I love that. Hey, man, 7 pars on 9 holes. I'll do that all day long. I'm so happy with that. I just can't wait to play again. I'm foaming at the mouth, ready to go. All right. Yes, we had a momentum trade long. No, I did not take it, but that is one that fits the bill for what we talked about with those one to ones. Not a great bottom, but again, this is one of those looks that if you're paying attention to your charts, we love that look. And almost without question, they get to a fib, and then sometimes they even keep going because they're so strong. So that's a really good trade from 02 up to 20, 18 points without even a blink. Putting with a pool stick, I'm actually really good at shooting pool. So I got a pool table at the house. So I'm not a bad putter. That's not Putting is not my issue. It's getting there is the hard part. Getting close. All right, so momentum continues, guys. When momentum continues, a lot of
Order
times, like
submitted.
with my market flow
Order
chart,
filled.
I'll take a stab at trying to get a breakout, but I won't give it much room. This is already over. So it basically would have to go up right now and finish the breakout, or it's not going. Trying to trade a breakout is not a good
Stop
idea.
filled.
Anyway, not going to happen. All right. Now, when you do momentum trades and you lose momentum, you lose a few ticks. And then you get the opportunity to potentially do a trend trade long. And again, look, we're talking about, remember when I said if the momentum doesn't work, kind of wait for a close above the triggers? So look, I'll
Order
put a buy
submitted.
stop in above the triggers. So if it doesn't close above the triggers, I won't be in. I mean, even that's iffy. I wish I'd go down a few more ticks first. But do you see how there's no divergence up on the high? There we go. That's even better. All right. Now, that's a perfect spot to go from. If it's going up, it'll go up from there, and now it's not. So see how whether you don't
Order
get a
canceled.
close, you don't even take a second trade or thought process. So that that rule on the Nasdaq does a really good job of saving your bacon. Now it looks like they want to stab and go get that bottom again that we were talking about before. So they've reached the bottom. There's no shortage of fun in the Nasdaq to be had, isn't there? And again, look, we've got strength and momentum to the downside. The only problem with going short is there's not a lot of room to a target area. So you end up getting in and then you get stopped out break even because there's nowhere to go. So there's no free, the next trade that will be free and clear, we're either going to be below all the blue lines or conceivably will be above '05. So whichever one of those we break out of, God dang nabbit. Whichever one of those we break out of, and again, look, the fibs held, lo and behold. Um, my guess is that we're going to momentum trade to the upside here in just a second. So we'll see. See how everything now
Order
potentially
submitted.
is.
Order filled.
We'll see. I may be wrong, but I don't mind losing if I'm wrong. A little early. Come on, don't do it to me.
Stop filled.
Shoot. All right. This is the same damn thing they do in the NASDAQ all the time. And they go take out the low by a tick or two. If
Order
they close
submitted.
above the triggers, I'm going to do it again because the low is supposed to hold. If they don't, then I
Order
won't.
canceled.
And it saves you a lot of time. a lot of trouble. And now we've got breakout to the downside. That's quick. Anyway. All right. Through one to ones. Traditionally, we're going to get a trend trade. I mean, usually we'll find out. Maybe, maybe not. The
Order
thought is
filled.
we're going to get one type of trade off of resistance without too much trouble to take us down to the next support. So now we got a pivot. And again, look, if we make a second higher divergence, party's over. So I'm already minimizing my risk here.
Stop filled.
Damn NASDAQ. They're just really a little off today. Damn it. Well, anyway, that's the good spot. And unfortunately, management got it. Usually, after the small triggers roll over, you'll get a little second chance at the same trade. It's just not super favorable looking at the moment. So, I won't do it. All right, guys. Questions, comments, concerns, things you guys want to go through? Anything that I can answer before we get to the weekend? Is there anything that you guys would like to cover? So, divergence and the small triggers up. This is going to be I can draw a box in. This is going to be the defining area for us right here between 86 and 84. No, it's been too fast for that. I incorporated a little faster chart when it was slower, but it's not slow anymore. Volatility's picking up, so I went back to a 13.2. Wayne, can I look at your chart? Sure. Hang on, I missed it. Let me go back and try to find it. Maybe I missed it. Zoro, I missed one of yours, and Wayne, I missed one of yours. So hang on a second. All right, so a good top, and then you had the white paint bar down, and then you waited for one up, and then you entered on the way down. Yeah, I mean, technically, that's not the white paint bar trade, Wayne. I mean, it worked because your large chart was kind of going down, but and I'm okay with it because there was termination on your little chart, but it's not the white paint bar trade the way I teach it. Let me show you something in the trading plan, in my trading plan. A white paint bar trade. Let me make sure. Where the hell is that picture? White paint bar trades must have a good top or bottom first that we're looking for. So that's the first. So I don't know what the top or bottom look like on your chart. Number one. And then the second part of a white paint bar trade is that you have to have the trigger lines. Let me see if this is the right picture. Nope. Bear with me. Hang on a second. I'm going to find. One up, one down. Okay, white paint bar trades do not. So this is kind of what you did over here. Whenever you're doing a white paint bar trade and you have one down and you're going long kind of thing, you want to make sure that the white paint bar is above the 8-3 triggers that are crossed up. Because when you do them, when the 8-3 triggers are on the wrong side or they're not, or they're crossed in the wrong direction, A lot of times they'll go stop you out first, and then eventually it's going to go. And the reason why I said yours was wrong is because your trigger lines, specifically, see how your trigger. Oop, let me blow it up here real quick. See how your trigger lines were crossed up, and your 8-3 triggers are physically above the other small triggers. So I'm not saying that, if the large chart had a great termination area and you had a pivot stop out and you had a one up one down, I'm okay with it. But it's not technically the white paint bar trade because at the time of the white paint bar, both of your triggers were up. Do you see what I'm saying right there? So that's not the correct use per the rules. You want at least the 8-3 triggers up, and you want the white paint bar to be above the 8-3 triggers to go long or below to go short. Let's see if my second picture, same thing. All right, so the other one is just a warning against strong triggers. If you have really strong triggers on your big chart, even if you have termination spots, don't do white paint bar shorts. So we don't want to trade against strong triggers anyway. All right. So look, this is more of a. Let me show you here. So look, this is more of uh, the white paint bar that we like to see. See how we have a white paint bar that's closing above the triggers that are crossed up? There may not be a lot of room, but that's a better look right there. This would be a better look. The 8-3 triggers are not quite outside. Obviously, you got a lot of resistance, but this look, here's the difference again. Over here, this white paint bar is wrong, the first one, down, because we're on the wrong side of the small triggers. When we move over here, this is the correct white paint bar because you've got, number one, you've got your resistances in place. And then number two, the 8-3 triggers are below the small and we close down below them. And that's a better use of a white paint bar right there. You see that? So hopefully that's helpful. If the odds for a high probability trend trade are 70-80%, what tends to be the odds for the white paint bar trade or a momentum trade? About the same. Everything depends on the quality of the top or bottom, Andy Man. The better the top or bottom, the better the white paint bar trade. So, like, for example, right, when we get to, look, there's two places. So right here and right here are very high probabilities that we're going down. So forget about the second one. We'll just look at this one. This one area right here with the location and momentum of our triggers is pretty significant that we're going to end up going to the downside. So from this type of area, from right here, this is where you would start looking for whatever the white paint bar is. So when we go to our other chart, we say, again, this is the one we were talking about that I said was probably better. This is that area that's really supposed to hold, and then ultimately, this is the white paint bar that closes below the 8-3 triggers going down. And then, they give a little one bar pullback to a high volume area. That's high probability white paint bar use because of the read of your big chart at this area saying that it's going to hold for sure. So you want to have all three charts say, yes, it's going to hold, and then you get really good white paint bar trades or high volume area trades. That's the key, the secret to it all. All right, Ron, I appreciate you being here as well. I think we've had a really fun week for sure. My trading today has not been very great. was a little bit off so far. So I'm actually down a few $100 contract right now for just for what we're doing in class. So I got to focus up and get my mind right, and we'll make a couple good trades here. So we do have a shit ton of blue lines. So we ask ourselves the same question that we always ask: location and momentum. And the momentum is pretty strong to the downside, but the location of the trigger suggests we could put a low in. Right? So traditionally, this is where, if they're going to make a low, we don't want to necessarily do white paint bar trades when the triggers are wrong. Do you remember what I said way back over here? I just want you to see something. If I can go back to it. Over here, I said that the small triggers were above the large, so the midband's going to hold. And then the same thing over here, the fibs are going to hold. And then I've said it a couple times, but once the small triggers get on the right side of things, so right now the small triggers are not really on the right side of things. So we have a really good area for a potential bottom, right? Tons of fibs, divergence, and all that, but it's not really a great bottom because we haven't really had a weak trigger bottom, and that's kind of the secret for really good bottoms is the weak triggers. So the next time they come down here, right? So let's just assume they're going to come down here and retest this area. If they do, then fantastic. We know it's going to be a high probability bottom. Now, flip side is if we break out up here, which I don't know if we're going to or not, but if we break out above 60, then the party's over and we're going to have to go long anyway, whether we like it or not. Right? So, anyway, we got a line in the sand right here that says, hey, if we break above it with triggers, we'll probably go long. If we don't, we may go retest the low one more time. So we're about to find out whether or not we're going to get through there or not. Looks like we're going. We'll see. There's no triggers above this yet. So it's a little fake whoop-de-woo. It's got a lean to the upside, but the triggers didn't really break above there. Now they're working on it. See how the triggers are starting to break above? Still a lot of crap in the way, making it difficult. And remember what I told you guys about divergence from one to ones. For me personally, it's kind of a don't do it. Or at least wait for some confirmation and be careful with it.
Order
We'll take
filled.
one stab at it. And if it makes a second divergence, we'll get the hell out. They've been really bad about those second divergences
Stop
today.
filled.
Yeah, there it goes. So that means we're going lower. Maybe. Maybe not. Should. Now look. 1, 2, lower divergence, lower divergence. You know, we're going to at least, worst case, test the triggers. So we just did that. That's the worst case. My guess is we'll probably go test the low and retest, this way down here. We'll see. If they roll up from here, cool. We'll go long, no big deal. But my guess is that they're going to go take out the low because that's what they love to do. So. You can't go short. I mean, you can technically go short, I guess, if you really want to, but this is the spot where if they're going to go test the low, they're going to test the low from. When you look at the triggers on this chart, it's not super advantageous for going short, is it?
Order submitted.
It's just not the right look. The smaller charts suggest, again, looking at a market flow chart and uh, we have a high volume area, we've got a good
Order filled.
spot. So, it's a high risk trade to go short. I'm on
Stop
Sim,
filled.
and you can see how quickly a high risk trade doesn't go. And again, look, I don't care about losing. I want you guys to see this. Because look, if I posted that picture in the room and I said, hey, Mark, I went short, and he would say, what the hell are you doing going short when your triggers are going up? You see that? So this is a warning to you guys. Don't stare at that market flow chart and don't stare at those little charts too much. And, if you want to commit financial suicide, trade against strong triggers going up. That's a really good way to do it. Anyway, so lesson learned. And again, look, I don't care about losing. I mean, number one, I'm on Sim and I'm just teaching you guys. But I think the visual of seeing it and thinking, oh my God, it's going to win or it's not going to win or whatever. Um, anyway, this chart does not suggest short trades are going to be super advantageous. The small chart does. And, again, the small chart eventually is so look, another instance of look, do you want to go
Order
short on the
filled.
small chart? I'm just doing it again just to show you how many times you can lose on the same thing. So, do you want to go short on the small chart? And again, we'll see. My guess is we get down here to the low one more time. But this is the same trade I did earlier, and this time it has a little better triggers. Not
Stop
great.
filled.
And look, same result. And now I'd ask Mark, I say, why did I lose, Mark? I just went short again twice. And he'd go, why the hell are you going short with triggers like that? How many times are you going to let the little chart trick you into doing something that you shouldn't be doing? Good lesson? I mean, I'm on Sim and, I lost it. It's no big deal. But trading against strong triggers is so impossible. Just doesn't work. Anyway, I proved it twice. What else? What other kind of mistakes do you guys make when you're trading? Let's talk about them. Location and momentum suggest that we're not going up anymore at the moment, not from resistance. So here's a question. Can we buy support if it says it's going up from support? Or can we not buy it because we hit resistance? Which is it? I mean, it's answering the question right now, obviously, but can you buy support if you've got very wide triggers to the upside and enough room to manage your position? Yeah, I think you can. Now, probably going to keep going and go all the way up to, 76 to 82. Objects in motion tend to stay in motion on the NASDAQ when you got high momentum. Gary, you're trading at 55% today, which is low for the week. Yeah, they've been a little bit snotty in there in the market, but now look, they're starting to smooth out a little bit. So the rest of the trading day is probably going to go pretty smooth. They don't look like they're snappy anymore. You know what I mean? They have a personality, the NASDAQ does. All right, last fib, and then we'll see what they say. And, are we going to keep going up to 94 or not? Looks like we might. All right, Steve, let's see what you got. As you were shutting down your charts, you recognize divergence, second lower divergence. I love second lower divergence. Momentum entry and easy money to the downside. Awesome. That's perfect trade. Love it. All right, Elvis and Gary, let me see what you got. So, Elvis, you were short with the triggers going up. And how did that work out eventually? Triggers going up always causes issues. Gary, let me see your trade here. All right, once again, you wait for everything to be going up and you took a long trade and you made a bunch of money. Cool. Nice job. All right. Fibs with location and momentum. Nope. Mid bands. So this is about the last spot line in the sand on the chart right there. So we have a mid band and a fib. Could it possibly hold based on our triggers? Now they've rolled over, so maybe not. Changes quick on the NASDAQ, doesn't it? If you don't like the way it looks on the NASDAQ, all you got to do is wait about 2 minutes and it'll change. My guess is we're not really going down because these large triggers are so high up here. Or at least we're not going down yet. Now, if we're going to go down, we may go down. We'll see. This should be our line in the sand right here. If it breaks much above that, we're not going down. But that's about the spot where if they're going to go down from, they should go. The problem is you're on the wrong side of your small triggers going up pretty strong, which makes it difficult to go short. It doesn't make it difficult. I mean, you can go short anytime you want. But do you guys see what I'm saying? Just as far as a read on momentum and triggers, this is the spot. Pretty easy to see. Damn it. Look at my Ninja Trader. I think it just froze. God bless it. Huh. Does that say time to go to the driving range? No. So, Gary, you're up $7,900 on the day on simulator. All right. That's awesome. How many contracts are you trading? Oh, cap locks on. 3 contracts. So you're up 8 grand on 3 contracts. That's awesome. All right, Elvis.
Order
Short trade from that spot we were talking about. Nice job. All right. All right, guys. The next 10 minutes or so, give or take, it's all yours. Questions, comments, concerns, anything you guys would like to go through. It's all up to you now at this point. I really think we've covered everything on God's green earth that can be covered. Just to summarize, the very first thing, the most important thing you can do is get the correct read on your big chart. If the read says we're going to go down, you can look for short trades. right? If the read says we're going up, you can't look for short trades. So again, this is another spot where potentially we go down from.
Order filled.
And again, we'll probably get to a fib, and then, who knows if it's really strong, it'll keep going. If it makes a second divergence up, the party's probably over. So you don't even have to risk a lot of money on some of these trades. Because if it doesn't go, then it's just not going.
Target filled.
All right, first target, and then, you see how we get to a fib, and, look, this is how you also assess whether you should get out. So momentum and location will tell you whether you should get out of your trade or whether you should hang on for more. So again, did we
Stop
get
filled.
to a fib and without any triggers below it? And you can see that the answer is yes. There was not really any triggers below here and would have been a better ultimate exit for the majority or all of your contracts instead of some of them. Anyway, now the momentum of the market still suggests it could go down. So not looking for any long trades, not thinking that there's a bottom in place for any reason. To think there's a bottom in place, you have to have a weak trigger line, not a strong trigger line. So again, they'll probably keep on pushing down until the trigger lines get weak. And conceivably, we go all the way down to 34. So, you start thinking about where is the farther area away that could possibly, make my trade go all the way down. And, as you start to break through things, well, it's so fast. Anyway, like I said, location and momentum suggested we were still going to go down. Probably get one more push down from here, give or take, because that's usually the spot where it happens from. And then we'll probably make it down to where we said, which is down to the 34 area. So, anyway, is it worth one more
Order
trade
filled.
from the spot to try to get down to the 34 area? Maybe it is, maybe it isn't. Anyway, now I'm breaking my
Stop
rules
filled.
because I'm on the wrong side of my triggers. Anyway. Alright, NASDAQ fun. Fun, fun, fun. It changes quick on the NASDAQ, doesn't it? They didn't really get a good bottom there. I mean, that's close, but just not. They weren't going to give up a good bottom. So, again, look, we did have weak triggers, which is also good enough for a bottom. I mean, that's close enough for government work, isn't it? So the question is,
Order
do we want to
filled.
do a little momentum trade to the upside to see if we can get this thing to go? And again, momentum trades are great when they follow through and they look horrible when they don't. So again, it's either going to look great really, really quickly or it's going to look horrible really quickly. And again, the cool thing about momentum trades is if you lose momentum, you get out of them.
Target filled.
So they usually either go right away or you just lose a little bit. So little momentum long right there. Maybe I could have got a little bit more out of it, but usually 1-to-1s at fibs is a pretty good spot to take some money. Obviously, they went a little bit further. Still going. And when you look at the trigger line over here, probably going to keep going one more time. Get up to 84.75. Can I explain you're on the wrong side of the trigger? Sure. All right, here, let me do it like this. let me go first to our user guide. So, understanding trend and direction. God bless it. Chris, Novak, we got to fix this. Hang on. I'm going to look. Where's my damn trigger line video? All right. Hang on a second.
Trend and momentum are,
So I want to find something in my trigger
so
line.
basically it's like two moving averages if
I just
faster
don't know
the
which
price
momentum
bars
it is.
themselves. There's only
So
three
here's
states
the
that the
picture.
price bars can be in.
Cheetah, price bars are above the small triggers. You don't really want to go short. So even if you're waiting for a trend trade to go short, if, and this is especially true on the NASDAQ, if the price bars are physically above the small triggers going up, it probably is not going to go. And if they're below, you're probably not going long. And if they're above, you're probably not going short. So that's the short version. Now, over here, when we talk about, so let's just say hypothetically, you're looking to do a trend trade short. So let me clean up my chart here real quick. So let's just say hypothetically at this circle, you're thinking, hey, I'm going to go short. Fair enough? See how far above the small triggers the price bars are here? So if we only had the small triggers on here, and you were saying to yourself, hey, this is a momentum phase of the market to the upside above our small triggers, we're not going short right there. So when the price bars are on the wrong side on the NASDAQ, usually it's really difficult to go short. Um, Once the triggers physically break above areas, that's where, traditionally we end up going long. So it's just location of the bars. There's another video that's on the. This is a 7-minute video. One of the best, or a 5-minute video. Sorry, 5.5-minute video. One of the best small trigger line videos on the planet that you're ever going to get. This is the best 5.5 minutes you're going to get for trigger line reading. Between this one and the other trigger line video, these two trigger
In
line
this lesson,
videos, I mean, it's everything you need to know. And then you incorporate it with the stuff that, where the area is with location and momentum, and your chart reading is going to go through the roof. Okay, where the hell did that market go, man? It's just going and going, isn't it? When it goes, it goes. Obviously, there's more long trades to be had in here. This one especially, because there's nothing in the way. Really, really easy long trade right there. Alan, how do you import the charts I put in the chat room? Okay, easy question, not a problem. Let's check it out. So the file that I sent you for my workspaces, which I'll just drop in here again just for fun. All you do is you open it up and you can see inside the zip file or my two chat room, they're the same thing. I just usually do two of each. So just you can, hold down shift and, or control A to highlight them both. And then what you want to do is right click on them and copy. And then you want to go back to your workspaces and you just want to paste them in. So right click, copy, paste. Gary, your goal is going to be 1,000 a contract on Monday. I love it. A modest 1,000 a contract. That's awesome, isn't it? When people go, look, I'm only gonna make $3,000 or $4,000 today. I'm gonna take it easy. That's a beautiful day. I'm really proud of you guys. Yes, absolutely. And I also did some wrong stuff today on, kind of intentionally against the triggers and I get in trouble. My wife actually tells me, don't do the wrong thing. Don't show them the wrong thing. But sometimes I think it's helpful when you see somebody take a trade because of what's on the small chart, but when it's wrong against the large chart and it loses, it reinforces the lesson that you don't trade against the larger chart. Um, like right now, the large chart is smoking to the upside, so it doesn't matter what the hell happens in the whole wide world, you're not going short yet. It's just not going to happen. So when the large chart's smoking up, you know, you're looking for long trades. I mean, obviously after a pip stop out, we'll probably go a little bit lower, but you're basically looking for longs or nothing when the large chart's up. So,
Order filled.
long trade or nothing, and then, look, take me up to the next red line and I'll be happy. Make a little $450. Don't make a third divergence. So look, if it makes a third divergence, I'd be out. So, anyway, almost don't even have to risk any money at this point. If it doesn't go, it's not going to go. Anyway, trade with the big chart, trade with the big and the small both together. 7 out of 10 times you're going to make some money. I mean, this is a quick $450.
Target filled.
Pretty easy. Bought the blue line, get out of the red line. It's not terribly difficult. So, again, when everything's going your way, it's a hell of a lot easier than trying to figure out tops and bottoms sometimes. And that's why, you know, we teach people to trade with the trend when they're new, and then, you can start doing fancy stuff later after, you really get the basics down. So, anyway, look, I appreciate you guys being here. I appreciate you guys letting me play around with you guys for the week. Hopefully, you've picked up a couple of tips and tricks that will help make your trading a little bit better. If you need something in the traders chat, say it. That's the place where everybody is. And I will look forward to seeing you guys in there and post a bunch of your trades. The more trades everybody posts, it makes it a better community. So I appreciate that. You guys